what happened is when I first started investing, I found that if a company put out a negative news release or the stock price dropped, I'd have a very bad, reaction to it. And I'd be running around like Chicken Little, the cartoon character, thinking the sky was falling, and I didn't understand, why. I just said, God, I got to stop having these reactions, these negative reactions. And so what I started saying is, the problem was that I didn't understand enough about the businesses that I was invested in, because I wasn't in a position to interpret the news events as they were coming out, or to determine whether it was a real issue or maybe just a temporary issue. So I started coming up with a series of questions that I would ask to increase my knowledge in a business, so that I'd be in a better position to understand how to interpret these news events and understand more about the company. But it actually ended up being somewhat of a mistake, because I started doing this for a lot of years, where I was just answering questions to answer questions. I did get to know more about the businesses that I was invested in, but the downside was that the amount of questions became cumbersome, and so in a way the checklist lacked a purpose. I started asking, what is this purpose of this thing? Is it just to answer questions? I am learning more about the businesses, but what is the purpose? And so I started thinking about the purpose of investing. And it's really, the purpose of investing is to understand the value of whatever you're buying, right? So because if you understand value, you know when to buy, you know when to sell, or when to hold. But so I started thinking, well, these questions, instead of increasing my knowledge of the business, should be more about understanding how to value the business. And so, you need, in order to value a business, you need to know something about the stability of earnings, and more importantly, how those can change in the future. And so you've got to ask questions, about the company in order to understand, be able to answer whether it's a stable earnings, or, is this, and how they're going to change. Things like, what kind of sales it makes. Is it recurring revenue? Or is it one-time sales, like patio furniture? What are the future growth opportunities? As you go through these questions, you're actually learning that valuation is actually quite dynamic. It's not static. It changes. For example, depending on the type of business, if you change a management team, it's going to have a profound effect, on the future earnings of the business. A case in point is JCPenney. Ron Johnson, when he came in a very short period of time, succeeded in decreasing 25% of the sales at JCPenney. So a management change can have a very big effect on the future earnings of a business. So it's really about understanding, just looking at a business in a more holistic way. So that's the purpose of these questions, asking questions about management, what kind of management team you're partnered with, looking at it from the customer viewpoint, looking at it within the context of its industry. So for example, in the past I would spend too much time trying to determine if a business had a competitive advantage. And over time I started learning that actually the most value in a stock or investment comes from as a business is building its advantage, not after it already has one. And so, a lot of the questions are centered around understanding if a business is in the process of building its advantage, because you can think of Microsoft, the biggest gains came when Bill Gates was managing that business and building it, rather than, now that it already is kind of a quasi-monopoly, that it already has an advantage. So really, that's one thing about the checklist, is it allows you to kind of look at a business from a multiple, stakeholder, as you will, viewpoint. And better understand how value can change, if any of those factors changes.